IND AS 108 operating segments. An entity shall disclose information to enable user in the financial statements to evaluate the nature and financial effects of the business activities in which it engaged, the economic environment and in which it operates. The standard requirement of the entity to report financial and descriptive information about the reportable segments. So it is they need entity need to disclose the information. That is the first point they're saying. They disclose the information and enable the user of the financial statement to evaluate the nature and the financial effect of the business. So the entity need to disclose, but it should also the information what they get from that financial information enable the user to evaluate the enable the user to they need to scrutinize it so that that data which is available for scrutiny to the user data. That is the first point, that's an operating system in which they engage and the economic environment in which they operate. So whatever operation they do, that is their sales, their purchase, what is the activities they do to earn the income, in that way the user of the financial statement will be able to evaluate that. That is a major scope of any business to be done. The standard requires entity to report the financial and descriptive information about its or reportable for a segment. Report the standard requires the entity to report financial and the descriptive information about its reportable segment. What is a reportable segment? This is the reportable segment. This is the operation thing we do. This is the business we do. Example, Reliance sector, they have textiles, they have electronics, they have fast moving goods. That is FMAC, fast moving goods. They have oil, they have electron communication. And they have various kind of business. So this is the business we do in this segment. This is the asset we have. This is the turnover. This is the net profit. This is our cash flow statement. Everything segment wise they need to be able to give. On the reportable segments and the operation segments, a reportable segment and operation segments are the aggregate of operation segments that meet specific criteria. So all their criteria, what they want to meet, should be met. The operation segments are components of the entity that engage in business activity. So these operation segments or should be operation segments. The operation segment are component of the entity that engage in business activity. Some activity they are engaging it, where whose business operation result are regularly reviewed by the chief operating decision maker (CODM) for allocation of resources and assessment of performance and for other discrete function financial information are available. So some resource has been used by the organization. What is the resource has been used? How much resource has been used? What is the result of the use of resources? Is it effective or not? That should be analyzed by who chief operation decision maker. Generally, the financial informations are required to be reported on the same basis as you used internally for evaluating operation segment and performance and decision how to allocate resources to operation segment. So generally, the information what they have, it is to be reported generally how they usually report to the manager. Such a way should be reported. A startup operations which is yet to earn revenue may also be an operating system. So in this operating segments, whether a startup will come, not it will come. So they are only putting money into it. They have not started earning, even though that segment is also be included in the operating segment. If an entity chooses to disclose information in regarding the segments which do not meet the definition of the standards, the entity shall not describe such information as segment information. So if they want to show some segment, but that doesn't fit description of the operating segments, that is, it doesn't have any income, it doesn't get any money out of it. It is not a startup. In that case, it's not even a segment. If the organization think it is a segment, they don't need to bring it into the definition of segment. The financial report contains both consolidated financial statements of the parent that is within the scope of the standard, as well as the parent separate financial statements. And segment information is required only in the consolidated financial statements. So where does the segment comes usually? The parent company gives a consolidated financial statement. Not only consolidated financial statement, the scope of the standard it says Segment information about this segment should have this income. This segment should have this in such a way also it should go on. The standard requires the entity to report a measure of profit or loss in an operating segment. So each segment, what is the profit is for example, if you take a SBI, so they have different measures, insurance, banking deposits, not only that foreign segments, not only that they have forex, they have equity segments, cash markets, they have mutual funds. Yeah, they are seeing pension funds. So there are various branches. Each segment, what is the receipt, what is the profit, what they get out of the receipt. That is, should also be given segment wise. It is also requires the entity to report a measure of total asset, total liability, and particular income and particular expense item of such amounts are regularly provided to CODM. So the management, the chief officer of the department should know what is a segment, what is happening, particular branch, everything. It's totally books of account should be there with this chief officer. It requires a reconciliation of total segment wise revenue and report segment like is profit and loss account and segment wise asset, segment wise liability, and other material segment items to corresponding amounts in the entity's financial statements. So entity financial statement, what they're saying is mostly in the parent company, what they show, so we have the total asset of this 20 crores. But this in this NDA says, NDA is 108 operation segments that says that you not only need to give the report wise the total income, but also you need to say the total asset is this many crore, total fixed asset of building of 15,000 crores is there. You should not say only 15,000 crores. Sir, we have 17 segment. Each segment, this is the, or this is where the fixed asset, intangible assets. Na? In each segment, what is intangible assets? So the balance should be segregated into segment wise. That is also they said. The CODM identify a function that is allocating resources to and assessing their performance of the operating segments of an entity is not necessarily a manager with a specific title. Often a CODM of the title is a chief executive officer or chief operating officer, but for example, it may also be a group of executive director or others. So who is the person? CODM is the person who allocates resources. Some companies may not have CODM, they have CEOs and CFOs. So they may also direct. Sometimes a group companies may have a group executive directors and others. So they are also a responsible person. So recognition of the person who need to report also been given in this segment. The standard requires the entity to report information about the revenue derived from the products and services or the group of similar products and services, about the countries in which you earn revenues and hold assets and other major customers, regardless of whether the information is used by management in making operation decisions. So this standard requires what are the revenue derived from what are the products, what are the services we do, from which service and all you got revenue. They should say not only that from which country you earn this revenue. That also you need to discuss. The company may say, sir, this and all we are not seeing, sir. We will get the statement from that and we will combine and do. No, the standard says so. Regardless the management consider of preparing a report or not, reporting of segment report, reporting of operation segments. India is 108 say, even though you don't care about it, reporting of operation segments. India is 108 operating segments. That as per the NDAS, you need to give all this in the report. However, a standard does not require entity to report information that is not prepared in for internal use. If necessary information is not available, the cost to develop it would be excessive. Sometimes the management will not be do. They will think that it's too costly to maintain. If they have not done, it's not a great deal of mistake, but it's all in the hands of the auditor. If you think so, it's important because the materiality is very important. The revenue where it been generated, revenue where it's been expended. Example, they have a branch in India. They are saying we are having branches in 7 countries. One of the country is only doing expenses, but other countries we have proper books of account and the revenue is high, but the expense which the country we make has no income, but expense is going on. So, but the management says that we don't have the books of account. At that time, knowledge auditor should use the professional judgment to see through whether such report is required. If he required, he should apply the professional judgment and he should apply the audit evidence. Standards also require entity to give descriptive information about the way in which operating segments are determined. The products and the service provided by each such segments and differences between the measurement used in the reportable segment information and those used in the entity financial statement, and changes in the measurement of segment amounts and period of freedom. Sometimes they are very different. Example, some countries may have certain rules of following accounting. Example, if you say you go to Dubai, the accounting of Dubai is mostly similar as per India. So mostly the accounting standards, everything correlate with this. But they don't have this standard rate of depreciation for the as per Companies Act or as per Income Tax Act. They don't have a standard rate. They have a different policy of the usage they do. But if you go to US, Canada, Australia, they haven't. The government says so. You can only claim this much amount as an expenses. So they keep the depreciation that process as per the different rate. But so as per India, yes, and some countries they say you can change depreciation as per the accounting policy, but you no need to report it as per the usage. There is no deregulation. Such countries says. So you may see some assumption difference, but when you come taking into the books of accounts, you may brought some will bring some changes that will show. That will indicate the material difference, but we should give a reasonable opportunity to be given and to be heard from the management. Why is that? And if it is fair, no issue. Thank you.